Most traders lose not because of entries, but because they don't know which direction to trade. Let's fix that today. In this video, I'm going to talk about how to build buyers step by step. Show you how to stop guessing and start trading with confidence. So let's get right into it. Let's use this JP225. So building buyers, every week before I start building my buyers, I usually start from weekly and building buyers every week. At the first day of the week, I started from Sunday, and every month, first beginning of the month, I just go through the market charts just to see, okay, how is the market reacting, how's everything, just to be sure. Then every week is from my week, from my bias from weekly charts, then scale down to daily and 4 hours. So when you say building bias is just basically means like understanding where price is coming from and where price is heading to, like understanding the storyline behind it. That's just you building bias. And when you want to build bias, you have to understand the market, you have to understand structure. And I trade SLK. And what does that mean? It means structure, liquidity, key level. And that's just the basics of markets. That's just what the market comprises of, the structure. And when we say structure, structure basically means the basic things you know about markets. Higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. You have this lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. That's just basically structure. And then if you turn it to bullish markets, you have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So this is just basic knowledge about structure. You understanding, okay, where markets is moving from, what trend is the market in? Is the market trending? Is the market ranging? Is the market in uptrend? Is the market in downtrend? So understanding that is going to help you to understand what structures it. And then when we talk about key level are just the key points in markets, like the turning points in markets that when price gets to this specific price level, price is going to either reverse or continue. Like they are basically the key points in the market. So key level, we have basically three types of key level. We have A-shaped key level and we have V-shaped key level. In SLK, it's so simplified that even a 5 years old boy can simply point out what key levels are. Sorry. So this is A-shaped key level. You can see this is letter A, this is V-shaped key level, and this is open close. This open close, you can only see this on your candlestick chart, but this you can see it on your line chart clearly. Now you see A-shape and V-shape key level. Open close is just two consecutive candles. That's open close, either bullish or bearish. Two consecutive candles. That's open close key level. So this key level are the key points in market that we use as our point of interest, that when price gets into this particular key level, I want to start looking to buy. I want to continue. I want to join the buy continuation or the selling continuation. So you get what I'm trying to say. And then we have liquidity. What is liquidity? Liquidity are just like the force. They are like a driving force for markets. That what is moving markets? Liquidity is what draws markets. They are what draws markets. Here you can see all these they are liquidity. All these are liquidity. You can see the way price cleared it. This is liquidity. This is liquidity. This is liquidity. This is liquidity. You can see the way this particular guy cleared out all this liquidity. So when we talk about liquidity, liquidity are just like driving force. They are like magnetic force that draw markets in a particular direction. So understanding your structure and key level is not enough. You have to understand liquidity. And understanding liquidity and structure is not enough without understanding your key level. So you have to understand the three all together. So now if you are building bias, we need the three. We need to understand the three that okay, this is my structure, this is the key level I'm looking at, and this is liquidity. So when you understand that, building bias will be easy for you. Now I start my bias from weekly time frame, and this is my weekly time frame. I'm using JP225 into pound 225 as a sample for this video, and this is it. So what can we see here? This is very obvious that this market is bullish, right? You can see price is giving a consecutive higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Then here we have a break of structure. This is higher. This has been broken already. We have liquidity sweep and break of structure over here. But then why we are not going to continue looking for sell is this. It's very tricky. We have a shape key level overlapping side of an imbalance, and there's liquidity resting above it. And then you can see the way this particular guy that cleared out all this liquidity close above. The price did not use this particular key level as a structural point. So if price closed below this particular V-shaped level, now we can say price has used it as structural point, and then you can start looking for sell. But then price did not close below it. Price cleared out the liquidity and close above it. So price just use it as a liquidity graph. So once we get there, this particular place, we might see reaction from there. But overall, we are going to take out this external liquidity. In bullish environment, what the price do? Price take out internal liquidity and move to external liquidity. And once we know that, okay, we are seeing bullish environment, our price has taken out the internal liquidity. What are we looking for next? External liquidity. And what even makes it more valid is this low has been taken, this high is still standing, and then this high does not have weak. And if you study your charts very well, you will see that whenever there is something like this, price is going to take out this week instead, because there is no weak, there is no liquidity here. This is just volume, there's no liquidity here. And mostly when you see candle like this that there is no weak, price is going to use the next candle to it that has weak as the liquidity. So if there is possibility, there's high probability the price is going to attack this liquidity. So price is going to trade higher to this one to take out this external liquidity. And so once I saw this bullish reduction, not because I saw this, I'm going to start looking for buy, I'm forcing buy in the markets, I just jump into buy. No, I scaled down to my daily time frame to look for confirmation. And then I can see this. Daily is also rejecting from that weekly key level. And once I get to my daily time frame, what am I looking for? It's simple. This is what I'm looking for. I'm looking for this, a liquidity sweep and a break of structure. Or let's use bullish. Sons. This is what I'm looking for. Liquidity sweep. This and a break of structure to the upside. Then, or I'm looking for this breakout, or see this to the same breakout to the upside. So either of these three, if I can see any of these three, then that confirms that I'm buying. But if I can't see any of these three, what am I looking for next? I'm looking for price rejecting from the weekly time frame, or I'm seeing a bullish engulfing. And this is it. This is open close right here. That is being engulfed like impulsively. So I can see this bullish engulfing. And then price is already forming that structure for us. This is liquidity sweep. If price close above there, then we have more confirmation. But then we have a clear entry here. There is bullish engulfing over here. So what am I doing next? I'm scaling down to 4 hours to confirm that particular buys that I'm seeing. And then this is it on 4 hours. On 4 hours, what can I see? This is just the example that I just made. Picture market cannot be picture perfect all the time, but you can interpret it if you train your eyes to see it. This is it, the break. If you remember what I showed you last time, this is it, online chart. You remember I said if I don't see this, I'll see this, right? If you remember, I drew this. So and that's just it. So as you can see, once I saw this, there is a breakout. The recent breakout, I marked it out, and that's where price reacted from. And once, okay, I got my first entry here. This is my first entry. You can take your entry from here. You can take your entry from here. You are both right. But this aggressive entry, like I got it immediately, and price got it. But then, if you are the type that love confirmation entry, you can scale down to 1 hour and look for confirmation entry. I got my second entry where two consecutive candle. Like I said, open close, two consecutive candle. Then we have this bullish engulfing, same as we have on daily bullish engulfing. So I marked out the open close and price got there. I have my second entry, and you can see the second entry is like 1 to 6. So it's really simple, but not simple. You just have to train your eyes for you to see it, and for you to be able to for you to be able to okay mark out this and point out, okay, this is what I'm seeing on the market, this is how I'm building my bias, this is what I'm seeing. So if I'm seeing ABC, then that means I'm going to do XYZ. But if I'm not seeing ABC, if I'm only seeing AB, I'm not doing XYZ. So that is going to help you to cut more losses instead of just jumping into market and gambling. This is going to help you to build your bias. So if you're not seeing any of that, then just let the market go. If it's not clear enough, let it go. The market will still be there tomorrow. But if you blow out your phone today, you will not be there tomorrow when the market is in your favor. So if you like this video and if you want more breakdown like this, hit the subscribe button, and I'm going to continue to post more trading content on breakdown and to help you in your trading journey.